Madame Lagarde and others, Stephen, have to deal with a unique European experiment. How does HSBC synthesize or model out what Mr. Draghi has to do and the ramifications on the original monetary policy of Europe?
Well, so we know that we've got monetary and currency union, but we haven't got the full fiscal and political union. And the way I tend to frame this is to say that if you think that the euro currency will continue to prosper in the coming years, then it's fairly inevitable that some steps are made towards the fiscal union. And I think that that's quietly going on. And you can see the agenda led by the French government and some agreement there with the German government. Obviously, you've got some challenges in Italy near term, but none of them, I think, really threaten the EMU project. So for me, you have to build that into your forecasting 1 or 2 years out, that you have this positive momentum in terms of the euro. Now, I know people tend to look at the noise and the current news and think differently, but in my experience, all of this political uncertainty has been something that you'd want to position against, and it's normally an opportunity to invest. So, you know, I could list you, there's a long string of positive stories. Spain was upgraded today. Greece is near to exiting the bailout. Portugal was the story of last year. You've had the momentum in France, the recent German election, and people only really want to look at the bad news, which clearly has been Italy.
Do you believe that Europe will escape negative rates?
Well, I think the probability of the ECB not hiking this cycle is much higher than it was a few months ago, and it was already quite high. So in answer to your question, there's a meaningful chance that the rate hikes, if they happen at all, won't go very far. So we're at -40. It would be nice to think that the ECB could try and escape the negative rates next year at some time, but it's all conditional on the data, isn't it? How can we possibly know what the world looks like next year? And I suspect that we've already lost some momentum. The forward-looking indicators are rolling over. So could you imagine a confluence of events such that this time next year, the euro somehow is stronger versus the dollar, and the data is weaker, and the inflation rate is nowhere near target? It's hardly a good time to start hiking rates. So for me, it's a meaningful possibility, Tom.